Hello, this is John Cavalli, and this is your January 2015 monthly review video. I'm going to go over the blog post. It is a Sunday, Super Bowl Sunday, and I've been traveling, so this video is going to be shot from home. Hope you enjoy, and let's get started. The first important point of our blog is another tax-saving financial planning tip. This month's financial planning tip is a reminder of catch-ups. And catch-ups are for those of us that are one of the advantages that we get for those of us getting slightly older. For 401k and retirement plans, that age is age 50. And what happens is the IRS has allowed us to add more money to our retirement plans. I'm sure you know that, but this is just a reminder. Here are the amounts. Here is actually a link to the website for the IRA, Simple 403B, and 457 amounts. Probably the most important point, and the one thing that is often forgotten, is for those of us turning age 50 or 55, especially age 50 for employees of large companies, sometimes HR makes a mistake and they don't get us in the system, and we generally find that you have to go to the company. So if you're turning age 50 this year, be sure and make sure you're getting these full maximum amount of extra deferrals that you get to put into your plan. Moving right along, one of the biggest things that happened this month was the Swiss. Let me see if I can get this lined up here a little better. But the Swiss, no matter what, you rarely see a chart that makes this kind of move. This was a huge move, and it crushed a lot of foreign currency traders. And the problem is twofold. Number one, I'm not throwing the Swiss under the bus, but they did say that just a few days before, as I had said, just after promising they would hold the peg to the euro, they couldn't take the heat anymore. Not couldn't take the heat, but they finally decided to let their Swiss currency strengthen. Long story short, this is strengthening by about 20% against the euro. Here's the implications and why we're watching it. It actually represents a little bit of a pushback against the governments, and that's probably, while I put it as the third, that's probably the main concern. The world governments, including the U.S., are pulling interest rates lower. And as they do that, these are the repercussions that are occurring. So another concern is that other countries follow suit. And then, of course, if you're a Swiss resident or native, you are now not competitive to travel, or all of your products just became more expensive. I do mention in the short term. So we're watching that. You rarely see moves like this of this magnitude on a chart. And I'll show you the chart coming up next, and you'll see how much more gentle it is, and it's pretty steep. So the implications could be far-reaching, doubtful, but we're watching it, and that's what went on in January. And because of that, in part because of that, the United States rates, this is the 10-year Treasury, the United States rates have dropped, and this is the end of January, so I was able to get this as of the last day of January's trading. This is the 10-year Treasury. This thing is at 1.67. Ignore the decimal point here. But this has continually, we started out the year last year, as you can see, around 3%, and we're now at 1.67. So we stand on an island, thinking that there are higher rates. And this link goes to a higher rates coming soon, that is. This link goes to an article that we've written and repeated. This is somewhat a function of other governments around the world pushing their rates down, and the United States interest rate has been higher than others. We're keeping an eye on this. Historically, when this drops this dramatically like that, it precedes a slowdown, a recession of that some type. We think that a lot of this is artificial. Other foreign currencies are piling in. Foreign governments and currencies are piling into our treasuries, driving the yield down. One thing we don't want is we would like to see this gently rise as opposed to scream up. If it screams up, think the exact opposite of this. We don't like to see these just giant moves. We hope that rates rise in a slow manner. We do believe that rates will rise, and we're going to be careful, because if they jolt up higher, it could lead to some disruptions. But those are the things that are going on in January. We hope you're having a great start to the year. It's already getting going fast, and we thank you for watching this video, and hope you have a good day and a good month. Welcome to February. Thanks very much.